Hello, everyone, and welcome to The Upside. I'm Kyle Cheropita. Over 2 million investors and 29,000 advisors invest with Fidelity here in Canada, totaling over $340 billion in assets under management. Fidelity does what's best for our clients, not shareholders. To inform these investment decisions, a vast investment management and research team in Canada and across the globe are constantly meeting with companies. So just how many interactions are Fidelity's investment professionals having every day and every year? What actually happens in these company meetings? And how does Fidelity prepare for these meetings and develop and maintain relationships? Joining me for a peek behind the curtain is portfolio manager Joe Overdevest. Hello, Joe. Thanks for joining me here today.
My pleasure.
So we last spoke in the studio here in June. We were talking about tech and AI. We had a great chat, and we were joined by Kyle Cheropita, who actually dialed in remotely. He was joining us from a research trip in Silicon Valley. And a few months later, I think it was November, I sat down in here with John and Ben, both analysts. They were also talking a bit about tech and AI, software, semiconductors, and the Silicon Valley research trip. So in both of those shows, the chat was just lighting up with people saying they wanted to hear more about what actually happens in these company meetings. And that really took us here today, to today's conversation. So I'd love off the top if you could just dive into just how many company interactions Fidelity has and what are these different types of meetings that we have every day?
So there's a number of meetings that take place. So the big buckets would be an in-house meeting where a CEO or CFO will come into our Fidelity offices and we'll meet with them. Number two is a conference where you'll attend a conference usually by a sector bias and you'll meet with multiple CEOs. Number three will be you actually go to head offices and actually meet with the company at their location. And number four is you'll do a video call, maybe during earnings season, which is a busy time we'll talk about later, or even during the quarter where we'll have a 30-minute to 1 hour call, maybe with a CEO. And one of the benefits we have with these meetings is we have the ability to be hosted by a number of investment professionals, and our size gives us that benefit of over 1,000 investment professionals around the world.
Wow.
And then so you might ask, well, how many meetings are we actually doing? We have over 20,000 meetings each year across Fidelity. And so somebody that's such a big number, people ask like, what does that mean? It means every 8 minutes of the business day, someone from Fidelity is meeting an executive and reporting back to us.
Wow. That's a staggering number. So on a typical meeting, who is it who's going to these meetings?
Typical meeting who will attend will be number one, the analyst who covers that stock. And also number two, any portfolio managers that might have interest. But the analysts and portfolio managers could be across different groups. So it could be fixed income, it could be equity, it could be high yield, and they would all attend the meeting together. The analyst runs the meeting. So the analyst will come with an actual agenda, and the agenda will have the key points that we want to get out of it. It could be sales, margins, capital allocation, outlook for the just general business groups that they are in. And the actual PMs will also be in the meeting. Key point we always provide is the analyst also has their model, their financial model with income statement, balance sheet, cash flow statement, forecasted out with valuation. So when we're in the meeting and the analyst is running it, the PMs all have the agenda, all have the model, so also can follow along where we're going with this, but also can be looking at the model going, okay, this is being said, in what context is that relevant or not relevant? Right. And then it's very open to any portfolio manager can also ask questions, and the conversation can go in different directions by all means. But it's nice having the analyst who's done, knows the company better than anybody, going, I'm going to drive the meeting, and from there we try to have a very fruitful discussion.
Okay, so a lot of prep ahead of time is what I'm hearing.
Yes, the analyst, of course, only covers about 20-25 stocks, so knows those companies very well. They'll know it very in depth. The PMs will know it as well. And they have a lot of knowledge that it's great to start off with the meetings and driving the discussion and making sure we get the key points.
Okay, so you go to the meeting and then what happens afterwards?
I think what's interesting is not just what happens in the meeting, but the discussion right afterwards. So right after a meeting ends, the PMs and analysts will often talk, even still standing up. We're not even sitting down yet going, what do we learn from that? And you hear from, again, the fixed income person, the equity person, could be small cap, could be large cap, different perspectives. I go, that was different, that was interesting, or that was maybe interesting for another company that we own, that we learned from that meeting, or that's something we need to follow up with our own research and such like that. Obviously, the analysts will give their feedback as well. The analysts will then sit down at their desk and write a research note. And they'll update that research note of what was the key takeaways. Does this strengthen or weaken my investment thesis? Does this change my investment rating? And then they'll also update their financial model. Is there anything that changes there? and then they'll publish it. And the benefit we get at Fidelity is that when we have all these investment professionals around the world, from Japan to Toronto to Boston, the research notes get disseminated to everybody. If you're a portfolio manager all the way to the co-op internship who's an analyst with our group, you'll get the same information.
Oh, wow. So you mentioned Japan there. So what happens then if there's, say, a group of analysts having a meeting with a company in Japan? Do you get to see those notes here in Toronto as well?
Yes. Not only do we get to see them in real time when they're published, but we also get kept in a database for Fidelity-only notes. Oh, wow. And so you can search the database and you can search it for keywords like AI or oil and gas, and it'll search up and look to summarize for you all the notes. And so I was a past analyst, so you'll see my research notes as well. So multiple decades of research notes of all of our database. So it's a great way also understanding the baseline. And often in health terms, they'll say that the baseline means you sometimes meet a CEO and you're like, is that CEO always like positive or always negative? Right. I don't know the baseline. Right. What's great reading the research and going, this CEO generally says this, and this is their general tendencies, and this is generally the outcome. And you can actually also calibrate it to make sure you know where we stand historically.
Wow, that's just an overwhelming amount of insights that you have to pour through.
Yes, one of the benefits of Fidelity, but one of the things you have to control is how much information and where to spend your time.
Wow. And then decades too, so that means there must have been some sort of digitization of past written notes at some point too.
Yes, there is definitely some old notes in there that have been added to the system. Wow. But many models and many notes.
So I'd love to just pick up on something you said there about fixed income. And I'm just relating that to a trip I did many years ago. We were doing a video series down in Fidelity US's Merrimack, New Hampshire office, which is the big fixed income office there. And they were also talking about company meetings. And when both the equity team goes and the fixed income team goes, it almost forces the C-suite you're meeting with to be a little more honest. Is that something you find as well?
Yes, I think it's great having all the stakeholders in one meeting. So the CEO often can talk about, well, we'll do buybacks and we'll use leverage. Well, both parties are there seeing the benefits of the company and their perspective. So I think it adds a very fulsome discussion for the CEO as well, knowing that everybody's there.
Wow, okay. That's really cool. And so next, I'd love to just get into those couple buckets you talked about off the top there and talk a bit more about visiting companies at their own head office. What would you say are some of the advantages that you have to going seeing them on their home turf?
I think when you go see someone on their home turf, number one is just walking in. Instantly, you already start getting perspective. So sometimes the head office could be in a strip mall, or it could literally take the entire block of a city, and you're starting to understand, okay, where money is being spent, or even the perspective of what's important to them. Number two is when you go in, is even just seeing how busy the office is. I've been in offices where they walk you to the meeting and all the desks are empty, right? Which is not a good sign. It could be a number of things why the offices are empty. And then also, or you could be there very busy and buzzing and there's multiple things going on. That's a totally different feel as well, kind of thing. And thirdly is usually when you're actually at the head office, you sometimes will get not only the CEO, the CFO, but different executives that are also not usually available on the road.
Oh, interesting. And you said something interesting earlier too, and that was that you might go into a company's office. It could be a one-off trip, could also be part of a research trip. Yep. We did talk briefly about research trips in our last chat. I'd love for you to expand on that a little bit more. Just remind the audience what happens on a research trip, how many companies are you seeing, what's a typical day look like?
Yeah. Research trip day, very busy. So essentially we'll probably pick a city, or generally a cities are close by. And so it could be the Permian for oil and gas, with Houston, Dallas would be stops as well. Okay. Silicon Valley for tech. And these are places you're going to go, and you're probably going to start, could be 7 a.m. in the morning, and it probably goes to at least 7 or later in the night, because you're probably going to have potentially breakfast, lunch meetings, and dinner meetings as well with company management. You're trying to get in as much as possible, because you also have to commute to these head offices. But a lot of times, like I said, you can actually go to the head office and meet multiple executives. Sometimes these meetings might be 3 or 4 hours long, where not just the 1 hour, because you're seeing multiple executives. Also within the trip, there's sometimes things that are specific to that area. So essentially at Silicon Valley, probably we're not just seeing company CEOs, but also venture capital people, and hearing what's going on with the new technology that's coming through. And that's probably not a contact you're going to see at a conference, or definitely in-house.
Would someone from the venture capital side be in that same meeting within the company?
Potentially, yes.
Yes. Would you meet them separately as well?
So the venture capital meetings, at least for us as public equity market investors, is very interesting. So usually it's a top priority for the public market PMs and analysts to attend with the venture capital. But yes, it would be a separate meeting along with our agenda.
Interesting. When we were speaking before going on air here, you also said something cool about hotels, that even sometimes just seeing what is the price of the hotel, how busy is the hotel, that can almost tip you off as to how booming an industry may or may not be.
Yes, exactly. I mentioned two very extremes. Obviously, sometimes you go have highs and lows in tech, oil and gas, where you'll go there and you can't get a hotel.
Right.
And sometimes you can get whatever rate you want, pretty much, kind of thing. So it is definitely an indication of how capital markets are perceiving these different areas.
Right. Thinking about oil and gas as well. You get Texas, you get Alberta. I believe that the Calgary airport has, I think, the only Chili's location in Canada. So imagine if that restaurant's booming at the time, that means a lot of executives from Texas are traveling up.
When you have boots on the ground, there's a lot of indications and a lot of touch points of how well things are going or not. Yes.
Right. Just thinking too about the business trips, the research trips. When John and Ben were here, they were talking about the Silicon Valley trip, and John being from London, came over here. Does the FSIM team, the Canada team, travel internationally as well?
Yes, trips can go all the way to Japan, to obviously anywhere in the US, to obviously Calgary, and obviously the UK or places in Europe. So it can be pretty broad where we go. And of course, China is definitely a stop in terms of what's going on with natural resources the last few years as well.
Let's talk about conferences now a little bit. I'd love to hear more. When you go to a conference, is it typically one company that's putting on that conference, or is it themed by industry and it's numerous companies? And then how many people do you meet in a day there?
Usually the conferences are themed by a sector. Sometimes they can be very general. But usually what will happen is the agenda, which will be probably, again, starting in the morning, going till about dinner time, and into sometimes dinner meetings as well, will have who's presenting. And usually the companies are presenting in a public format with a big audience in front of them talking. And there'll be multiple companies going on for 30 minutes to an hour. That usually will last, many conferences will be 1 day to sometimes 3 days. What Fidelity will do is we will crest one-on-ones. And so most often we will actually be in the one-on-ones as opposed to the general session. So the general session is, again, useful, but the one-on-one meetings are usually done in a hotel room where Fidelity will have a time to actually ask the questions that they feel is beneficial to them. And with the CEOs or CFOs, and usually those meetings are 30 minutes to an hour, and we'll go from hotel room to hotel room and generally have a set agenda. Again, many days could be, again, starting in the morning, goes all the way to nighttime, but very beneficial to finding out what's going on in a sector.
You said there are questions that are impactful, that mean the most to you. So what would some of those questions be? Like, how do you prepare for these intimate meetings, and what do you want to get out of them?
I think when you look at investment meetings in general, people often ask, what's the focus of it? Going into meetings, you know the what and you know the when. What I mean by that is that when you go in, they might want to double earnings in 5 years. That's the what, when. The investment meetings themselves are helpful as how and why. So we want to go in there going, okay, we know these details. How are you going to do this? And why are you going to do this? Why is this, how are you going to launch this new product? And why do you think this new product will gain share? And that's building conviction. Much like people here watching a video, they're building conviction on a certain subject or a certain company. Same way with us. We can read stuff in a press release. We can see stuff in a presentation. When you're interacting with a CEO or CFO, you're saying, he or she is gaining my confidence in this investment. And so maybe that will be a difference maker in that not only what I own, but the size of the position I take on.
Right. And I'm sure the relationships that you've developed over time aid in getting these intimate meetings too.
I think sometimes that's a very good point of what perspective or strategy you want in a meeting. I think one of the things I would say is that, at Fidelity, we try to have is respect.
Yes.
So you can often go in these meetings and go, you know what, we're going to go with a certain angle, very aggressive. And that may work, or you may think you benefit in some way, but you also have to understand, what did you really gain and what did you really lose? So when you go in with a strategy of respect, we will often ask questions that are maybe more difficult, but have to be asked.
Right.
But we're always going with a respectful tone. And the reason why is because if you don't go in with a respectful tone, the CEO or CFO may not even want to answer your question you're asking.
That's right.
And may say, you know what, I'm just, let's move on.
Yeah.
Okay. And number two, more importantly, is the relationship. Fidelity's been here for multiple decades and plans to be here for multiple decades. So not only for our current investors, but also our future investors and clients, if we ruin a relationship, it hurts the future generations of our clients.
Oh yeah.
And so we go in with a level of respect. They know that with Fidelity, we're going to give this, we're going to have respectful questions. And this is a relationship that's going to last multiple decades. Even if we own or don't own the stock, it generally does us better than maybe a more aggressive stance.
Right. You're always just gaining information that ultimately will help our own clients in the end.
Yes, exactly.
Yeah. I also imagine, don't let me put words in your mouth, but have you gotten really good at reading people over the years?
Yes, I think the more you do this, it's tough not to have maybe some benefit, and especially with our young people, it's actually teaching them, mentoring
of course,
them.
Yeah.
What did we take away from a meeting? That's why those discussions after the meeting are sometimes helpful for a young analyst who hasn't seen this person for 20 plus years.
Of course.
Where a portfolio manager has and says, you know what? This was different because of these things that I noticed. That was behavioral wise different. Some of us do have certain training that was brought on and provided by Fidelity that involves how we should read someone. It's not as much as what someone is saying or not, but are they feeling comfortable with your questioning?
Right.
And there are certain clues that someone may give off.
Interesting. Now, what about during the COVID days or even now on certain video calls, Zoom calls? Can you still pick up on those cues? How is that time different?
I think there's definitely things, there's always data in everything. And what I mean by that is like how quickly they respond.
Right.
When we asked their meeting, how quickly, who was available? Was the CEO available? Was he or she not? Definitely on the call, you can pick up things as well. Just because, again, the mannerisms of who they are. A video is definitely more obviously impactful than just an audio call. So again, it really helps with the baseline, getting as many data points in as possible and keeping a strong relationship with companies, again, that we own, and many companies we don't even own, but it could in the future.
Okay. Now, to pick up on that, I wanted to talk more about phone calls and video calls and relate that back to earnings season, which I believe we mentioned briefly off the top there. Maybe for our audience, you could start by defining what is earnings season. We have one coming up soon. And then what are you hearing from companies during that time? How does that impact your interactions?
Earnings season is a very busy time. So essentially for
I know from trying to book people for these shows, they always say, not this week. Yeah.
Exactly. So for analysts and portfolio managers, why it's busy is the companies we invest in is they report every quarter. So every 3 months, they have to give their financial statements and generally do a public conference call and put out a press release. So what we're doing as portfolio managers and analysts, reading the public press release, being on the public conference call. The analysts will then update the note and update the models to what they were learning from the actual release, changing any kind of forecast they have going forward, publishing that to us. So as portfolio managers will then say, okay, we took this information in. This is also what the analyst is now saying is different. And this is the output. But also that day, we'll also usually have either, if not that day, pretty soon afterward, another follow-up call, a private conversation where we have a video call with the CEO or CFO and asking our questions, again, going back to our agenda, the same agenda and style we would have in person, we would now have a video call. And so the days can be very busy. It can be multiple public calls, multiple one-on-one calls, but it's a lot of information, usually within a 2 or 3 week period, but are usually very helpful to understanding what's going on in different companies.
It's great to hear just how prepared everybody is. Like, you're not just going into these willy-nilly. Like, there's always an agenda, there's always a purpose, and it's just contributing to that long history of notes and information sharing. It's all really impressive.
I think when the CEOs, they joke when they meet us, they know that we'll be prepared.
Right.
I think that's one of the
decades of notes that you've read before that.
Yes, and they know what to expect from a Fidelity meeting. They know that we're not going to just go there and go, okay, tell me about your company. Go through a flip book and tell me about your company. We know about your company.
You're way past that.
Now we have an agenda of the key items. Let's just start off with, do you have any key messages? If they have a key message, okay, we can start there, because I think it's always polite as well to say, what key message they want, instead of driving into all of our questions. But once that is delivered, then we go into our questions. They know this is going to be a value-added time for us, and more importantly, respectful of their time.
It's great to hear. Now, one final question for you, Joe, before we wrap up today. I was curious, in terms of our Fidelity's global research resources, is there anything maybe that we didn't get to today that you'd like to touch on there? Just the size and scope, really, of what Fidelity has internationally.
I think with the international presence we have, what's really interesting is we get perspective. And I think that's really important in the investment industry. It's not just hearing what's going on in Toronto or Montreal or Vancouver, but taking a step back, especially in a very dynamic world we live in. When these meetings are taking place, as we said earlier, we get the research note right afterward if we're not attending the meeting by video personally as ourselves. And that's really important to get the information timely, to get the information directly from an analyst who adds perspective, what is important, what's not. And lastly, as your point says, it's not just a perspective on our country, but on what's going on in the world.
Wow. All very impressive.
Thank you.
And just think about how many extra meetings have happened in the time we've been talking today.
Yes.
Well, I really appreciate you coming by here today. Thanks, Joe.
My pleasure.
All right, and thank you all for watching today. So here at Fidelity Canada, we're releasing new content daily. So please look up the Upside or Fidelity Connects podcast for more. You can get an exclusive first look at Upside shows as a streamed webcast where you can learn to be a better investor and hear from some of Canada's best stock pickers and leading financial experts. To not miss a show, head to fidelity.ca and sign up for the next webcast or the Upside newsletter. Thanks for watching today, and I hope you'll join us again. I'm Kyle Cheropita. Thanks for listening to, or watching, Fidelity Canada's The Upside podcast. Subscribe on your podcast platform of choice so you don't miss an episode. And if you like what you're hearing, please leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. While on fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on LinkedIn, YouTube, Instagram, or X. We'll wrap things up today with a quick disclaimer. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy or an endorsement, recommendation, or sponsorship of any entity or securities cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks for tuning in. We'll see you next time.